Hey folks, Dan Frio here, the Mortgage Update. Today is August 3rd, 2020. And this episode, I want to talk about all the rumors out there saying, home affordability is at an all-time low. And I want to explain to you what that is. And then I also want to explain to you, or try to explain to you, where the real numbers are. So let's get at it. The headlines today, and this is at multiple websites that I'm going to, is plummeting mortgage rates make affordability. You can afford a $32,000 more in home value than you could before. So the next headline, home affordability best in 4 years. Lock in your rates. They're starting to surge. So that's the direction I want to take right now. So here's what I normally do when I have a young person or a young couple call me. We go through their credit. Well, basically, I'll answer any and all questions they have. And usually that's about a 10 or 15 minute conversation. And most of them don't really know where this is going when they first call me. But when I'm not trying to sound creepy or anything, but I'm always like, treat me as like dad for about 30 days till we get you into this. Meaning, I'm going to put you or guide you on the right path. I'm not in this for a quick buck. I've been doing it for 32 years. I'll give you all the good, the bad, the ugly, the terrible. And I'll give you a bunch of advice, and it might be advice that you take or you don't take. And God gave you 2 ears for a reason. Hopefully it goes in and stays in there, but it can go in and go out. But that being said, what I usually do is I'll answer all the questions they have, and then I'll say, you know what, here's some of the questions you should have maybe asked, or where we want to focus. Because when you're done, I want you to get it. What frustrates me is when somebody puts you into a program and they said, we put you into that conventional program because of this and that. Well, and they don't really even know. So when you're buying a house, you go to the closing, and it's like, I don't really even know what I'm getting. What I want to do is I want to say, okay, here's your options. With your credit score, you qualify for a Fannie Mae, a Freddie Mac, and an FHA. And I'll explain what those are. And here's the good, the bad, and the ugly of each one of them. Here's what I would do. If you were my son, my daughter, here's the program I would put you in, and why. And I'll explain to you, and I'll go through, this program has a better rate, but the fees are more expensive, and the PMI, and I'll explain that later. Or this or that, and I'll explain it and say, here's what I would do, but you're the boss. I'll do whatever you want me to, but I'm guiding you down a road that I think is beneficial for you, nobody else. And the reason being is I don't want you posting, especially on this YouTube channel and Facebook and Instagram and all this, that I talked to Dan and he put me in a crappy loan. Their fees were outrageous, and you won't get that, I promise you. Because I want you to understand it. When we get done, you're like, I know. Well, why did you go with an FHA? Oh, because this. You don't have to be an expert at it, but I want you to get it. Okay, so that's my whole point of doing this part of the equation with you. So what I want to do is I want to talk about the numbers. So let's break down the numbers. Here's my conversation that I usually have after they've given me all their questions and a lot of their information, is I'll go back and say, okay, what are you comfortable paying? You get it? Where I didn't say, you know what, let's get you approved for the maximum amount you can qualify for. I never say that. I'll ask you, what are you comfortable paying? It's up to you. You might be comfortable paying $1,000 where you can afford $4,000. You have to be realistic though. Sometimes I'll have people call in there and say, I really want to buy a house, but I can afford like $600. That's going to be tough. So be realistic, but most of the time it is. So let's go over where the numbers truly look like. So our average loan, or our home value, especially with first-time home buyers, is usually right around, believe it or not, the $300,000 range. We do a lot of business in California, Texas, Arizona, Florida, Illinois doesn't have that high of value in most first-time home buyers. A lot of the suburbs do. Take that back. But here, 300,000 is a very common number, and I'm going to show you why, especially in those areas, because your rent in those areas are going to be between $1,500 and $2,000 a month, believe it or not. So let's take that down. Let's say we're trying to work around a $1,500 payment. A lot of first-time homebuyer programs come with 3% down, 3 or 3.5%, not the 20% down that you might be thinking. Okay, so we have that 300,000, 3% down gives us I got to show you where I'm at. You go to the rate update. It's up here at the corner, therateupdate.com. This is my website. If you'd like to get more information about me and everything else, when we're done, I'll bring you back to this site. But we're going to go over to free tools and payment calculator. All right. So we go into the payment calculator and 300,000. Oh, it's still up there. 300,000, not 20% down. If you got 20%, God bless you. Go with it. But we're going to go 3% down. The interest rate right now is 2.75, and I quoted about 20 times today. Your PMI, we're going to go with a factor of 0.55. That's a common number with these parameters. And one-time expense, let's just make it simple. Let's do 0 right now. Property taxes, in most cases, most states in the country have a factor of 1%. Homeowners insurance, that's going to be a standard, and that's it. What's my payment going to be in that particular case? $1,187. All right. So we're working on a $1,500 payment. Well, let's just say, let's figure out this home affordability thing first, that all these headlines keep telling you, is you can afford $32,000 more. Okay. So last year at this time, rates were 3.75. So what's that payment? Oh, let's do this. $1,187 right now. Last year, that payment would have been, on that exact criteria, $1,347. So what's that? 100 and let me do the math. Sorry, I should pause it, but I'm doing this live. A difference of $160. Okay, but let's go back to the 2.75. So all the headlines say the affordability is there, yes, but I don't know where they get some of these numbers. So let's see if 32,000 makes sense. So 325,000, 1,347, and prior to that it is. So it's $25,000 is the variance. They did a fantastic job then writing this article. Okay, so now let's get back to where would you be if you're comfortable with the $1,500 payment. The first thing I'm going to say is, why don't you try to go out and find a house for $325,000? If you love it, you like it, your payment's going to be $1,347. It's $150 less than really where you wanted to be. That's fantastic. But if you need to go up to $350, let's see where that puts us. $375. There you go. So now you have a range. Now you kind of know where you're fitting. You can go up to $375,000 with these numbers and still be in the range that you wanted to be. So hopefully that helps you, and I'm giving you some guidance on where to go to find some of this information. And basically what I'd love for you to do is just, if you'd like to reach out to me personally, just give me a call. And the best way to do it is go to the rate update, therateupdate.com, and all my information's right here. You can reach me personally at 844-775-5626, or connect with me on any of social media. Love to hear from you and love for you to be a follower. Or you can email me, and that's what a lot of people do. They email me. My email address is D for Dan, Frio, which is Frio. So dfrio@preferredrate.com. I'd love to hear from you. But if you want to get the ball rolling and start your application right now, you can want to do one of two things. This is basically going to answer some questions, and I'll call you and we'll go over, any and all questions you have, and I'll kind of walk you through piece by piece. If you really want to get the ball rolling, I'd suggest you just go here and hit the Apply Now button. Here's a list of all my loan officers or loan advisors. If you're working with any of them right now, that's awesome. If not, just click me, Dan Frio, down here, down below. It'll launch you right to this site, and it's a secured site, and you could go through and just start filling in all the information. At the end, based on the questions that you answer, it's going to tell you, here's some documentation that we need from you. You can do this now, or you can do it later. But the more information I have, the better. And the better educated, or the better the information I get from you, the more solid your pre-approval is. So based on the questions that you answer, it's going to say at the end, we need your last year's W-2, a pay stub, and a bank statement. And it'll give you 3 little blocks. All you need to do is drag and drop your pay stub into that section, your W-2 into that section, and your bank statement in the next section. It'll securely go right into your file, into my database, and I'll have all your information at my fingertips so I can start working with you and give you a call back and start the whole ball going and getting you on path to home ownership. So I hope you find this video informative. If you do, please don't forget to give me a thumbs up. I'd love for you to subscribe down below. Click the bell. Anytime I post a video, you'll get an alert. Watch the ones you want. I'm going to try to put the titles in as clear as I can. So there's probably going to be videos you don't want to see. Don't watch them. But the ones you want to see, you can click on, and we can go from there. So I hope you have the best. Hope you health. God bless you. Take care. And I'll see you tomorrow. Same time, same place. Bye-bye.